Accounting Podcast by Professor of Accounting, Episode 15, IAS 7, Statement of Cash Flows, Exam Techniques. So I want to look at and draw on some of the mini calculations that you could be asked to perform in this topic to get some substantial marks. And the question is quite a lot of work that you do where you only get single marks. So if we can harness on some of the harder calculations, you stand to get certainly almost full marks for the question if you can do these. So let's start off with some synoptic work from IAS. I've got two ledgers here. They're the same ledger. I want to look at it in two ways. A disposal ledger for machinery. I want to look at proceeds and profit and loss. So let's say we have a £10,000 machine and we are selling it. So we would therefore credit the machinery account to remove it at cost and debit the disposal account for machinery. The depreciation needs to be taken into consideration, so we would debit the depreciation account and credit the disposal machinery. So we've got a £10,000 asset, or originally bought for 10,000, and we're selling it for, I'm telling you, £7,000. So you might think that's a £3,000 difference, and you're selling it for 7,000, not 13, so it's a £3,000 loss. Well, it would be in theory, but it's not. You actually are selling it now at this point in time, and over this point in time, you've accumulated depreciation. So it's not a £10,000 asset anymore. It's now 5,000 because cost minus ACDEP is NBV. So NBV you've got to be thinking of. So it's £5,000. You sell a £5,000 machine for £7,000. So the difference is 2,000, and it's more than it's worth. So it's a profit. So you know it's £2,000 profit, and you may know where it goes in the ledger. So what I want to show you here is just, if you're not too sure of this, let the ledger help you. So glance down the ledgers, both sides of the ledger, and see which values or total is larger. The credit side is larger, it's 12,000. So put the total in, move the total over, and then find the difference between the two values. So you get £2,000. Now you've got to think about profit and loss. Well, you're debiting the disposal account, which means you're writing on the debit side. So you're crediting the P&L. You're crediting the P&L. So credit to the P&L means a profit on disposals, other income. The credit entry in the ledger is other income. It's not relevant, but it's also an increase of capital, and a credit entry would be an increase of a liability, but they don't fit in this case. Let's look at that again let's look at a loss. So same situation. Let's say we sell the £5,000 net book value of the machine. We sell it for 1,000, so that's going to be a £2,000 gap lower. So it's £2,000 loss. We know that. So let's let the ledger do this as well. 10,000 on the left, debit, 8,000 on the credit on the right. So it's 10,000 which goes in the total. Move the total over, take them away, and you get your 2,000. Now you think about which side is which, and you get used to these after a while. You should be by now. Well, you're crediting the disposal account, so you're debiting P&L. So debit the P&L is what we call a loss. So it's expense. So debit to the P&L is an expense. I mean, entries as well in ledgers. If you think of the trial balance, what other things go on the debit side? Well, there's drawings because of decrease of capital. You've got a decrease of income, but we think of it as an increase of expense. And I suppose lastly, you've also got a decrease of liability, but none of those fit or are relevant in this case. So P&L, the only two things that go to P&L is debits, expenses, and credits is income. So that's the ones you got to think about. Now, what I did here is I gave you the proceeds, and you worked out the profit on disposal or loss on disposal in either case. However, there was a question where you had to work out the proceeds, and you were given the profit or loss in the relevant case. So why is it important to observe? Well, if you remember the layout that I've shown you in the previous podcast, profit on disposal, loss on disposal, well, that's relevant to the statement of cash flows. A loss on disposal is added to the operating activities. Go back and look at the layout if you're not sure. Whereas the proceeds from the sale or the disposal is added to the investing activities. So you need both values. So either way, they either could be very, very kind and give you both values very simply and test something else, or they could be cruel and obviously make you work out one of the values. I can't really see a way of you having to work out both at the same time. I don't think it would be possible, because you have to know one piece of information to work out the other information. So certainly food for thought in terms of thinking about how this basic kind of area, it's not too difficult. I think this, some students do struggle but with this topic, or have to work harder to get understanding it, but I don't think it's too bad for you to understand this in order for you to adapt it and use it for certainly the A2 tests and the A2 exams. So that's just a bit of synoptic. Let's look at another example. So let's look at operating profit. Now I've adapted this from a previous question because it was commented on by a lot of students, some that I did teach. Their feedback was very interesting in terms of what they thought of it and their approach. So what I mean by that is many students, they couldn't understand the question because the way it was laid out, and they had to really think about it, and eventually they did it and did something and did reasonably well. So let's look at the information in this case. What I've given you is a summarized balance sheet for the 2 years, and what I want to work out is I want to calculate operating profit for the year end December 2009, but I've got a balance sheet, so 2 balance sheets are summarized. So how would I work that out? Typically you'd be given operating profit or profit in some form, and you have to deduct or add some values. This is a bit different. So this is the approach that I would take in this case, and this is one of the questions like I've mentioned. I've adapted the numbers. You want operating profit from a balance sheet, you've got to think about the appropriations account, and I'll show you an example of an appropriations account shortly. In the appropriations account, you appropriate operating profit, NPBIT. So what do you do with that profit? Well, you pay your tax to the government, you pay interest, finance costs, you then pay dividends, you then do transfer to reserves, and then the final balance left, if there is any, and usually there is, whatever is left is unappropriated profit. Well, where does that go? Well, that will go into, well, it used to go into the profit and loss account, or the formal profit and loss account, not the what we think of it as, but it's now called the retained earnings or retained profit. So that's what we have in this case. We've got retained earnings. So the approach here is to think like the appropriations account and remember retained earnings. But look at the columns. We've got 2 columns, and get the columns the right way around in your head. Draw a box so we know it's the most the closest time frame, or the time frame we want now is 09, so it's the left column, and 08 is the previous year. So we want 8 to 9, the change from 8 to 9, so it's that direction. I say that because some questions could be the other way around, the arrow pointing to the right. So we want this direction, but we want the retained earnings. So how does the retained earnings change? Well, it's going from 226 to 846, so it's an increase. It is not a decrease. It's not 846 to 226. So be very careful how you interpret the information. So that's an increase, and let's work out the value. It's an increase of 620, which is in thousands. And that would be called the unappropriated profit carried forward. So that value, 620, is the value after you've done all the appropriations. Again, I'll show you the statement, the appropriations account, not for this question, obviously, you didn't have to do one, but an example shortly. But that £620,000 has what's gone into the 226 to get 846. So we've got to work backwards in this case. So what elements in this question have been utilised to get the 620? What's been taken away from a number to get 620? Well, go through what I listed there. Was there any finance cost? Was there any tax paid? Well, you know there is some tax, or should I say rather tax expense. It's not the payment, it's the expense. You know there's some tax expense because you've got a liability there in 2009. So you've got the 112. And you've also got, in this case, so obviously gives you a value of 732 if we add it back. You've got to add it back because we took it away originally. We've also got the dividends. So dividends in this case 98,000, so that's written underneath. And that lastly, that's taken away, so you've got to add it back. That gives you 830,000. So what else did I mention though? I mentioned something called transfers to reserves, which you should know about. Well, look at the question. We've got reserves. So were there any transfers? How do you know there were no transfers during this year? Or how can you be certain for this question? It is a fact that there's no transfers, and how can you know that from this question? Keep looking at the direction of the arrow. Transfers to reserves. If you transfer any money from profit to reserves, then the reserve account should increase from one period to the next. Obviously, I assume there's been no, the reserves haven't been utilised for certain things, but any transfers to reserves, you would notice an increase. So from 2008 to 2009, reserves have gone down from 424 to 264. So you can be certain there's been no transfers. If it had increased, then there would have been a transfer, and you would need to take that into consideration as well. So a little example there, a very useful example, rather straightforward to some extent, but certainly an awareness of a question like that to get profit is important. Let's look at the we've just mentioned there the change in the reserves. Let's look at an appropriations account example. So just a structure template. I'm using numbers, but they're just numbers I'm just giving you. I'll start with operating profit, NPBID. So net profit before interest and tax. Finance costs, which is 10,000, which is deducted. Profit before tax, 40,000. Corporation tax, 8,000. And you'd be given values. If you had to work out 8,000, you could look at liabilities, because this is the expense, not what you've paid. So corporation tax, 8,000. I suppose in the other question we had, it'd be the value we have to use, because it's just the expense for the year. Then it's the profit for the year is 32,000. Well, what are we going to do with it? We have some transfers. General reserve gets 5,000. Fixed asset replacement reserve, I'm going to give 10,000, so that's 15,000. Take it away, you get 17,000. Dividends paid. So in this case, I'm going to use the 17,000 to pay some dividends. 20,000, 10% preference shares. So what do I need to know to get the dividend? Well, I've got to know their par value, so it's £1 each. They were fully paid, so fully subscribed. So in that case, everyone that's bought a share has paid for it in full. So then that means that they can receive a dividend, and it's a final dividend. So 20,000, 10%, £1 par value, that gives you £2,000, and you know that from the maths. Preference shareholders, again, this is AS work, but because this is an AS topic, preference shareholders, they know in advance the dividend they're going to get. In total, this is. So 20,000, 10% preference shares, so it's £1 times 20,000, £20,000. 10% of that is £2,000. Let's look at one for ordinary shareholders, though. If you've got 10,000 ordinary shareholders, shares, and it's 50p each, that's par value, nominal value, or face value. They're fully paid as well, and it's the final dividend. So there was no interim dividends here. Why have I given 25 pence in brackets bold? It looks strange to be there. I had to give that because you can't work out the dividend otherwise. Ordinary shareholders, that you get told how much is going to be paid to shareholders. So it's other information. So I had to tell you 25 pence. Well, how do you work this out then? 10,000 ordinary shares, 50p each. Well, if you use that information, you're only working out how much the shares are worth. So 10,000 raffle tickets, 10,000 shares, and they're 50p each. How much is that worth? Well, it's half the value, isn't it? If it was £1 each, £10,000, but at 50p, so it's only £5,000. Does that help though? Well, no, it doesn't, because all you need to do for the dividend is it's 10,000 shares that are receiving 25 pence each. So it's 25 pence times 10,000. So don't forget the decimal, 0.25. So 25 pence is a quarter of £1. A quarter of 10,000 is 2,500. So it's £2,500. Total dividend 4,500. Take that away. The last value is the unappropriated profit carried forward. So where does that 12,500 go? That would go you'd add it, because it's obviously it's the balance left, profit left, into the retained earnings. So this is the position that we were in before. I know that the values are different, but look back at my example before, the one for the exam, this example, find some commonalities, find a relationship between here. One thing that is incredibly obvious that I want you to point out is I just completed that example, and when you used to do this at AS, you used to go down and complete the section like this. So you could be thinking forward, learning a layout and completing the account, or you used to when you used to do this a few years ago. However, for A2, it's obvious that you're not going that way, are you? You're going this way, so you're going up. So for A2 level, you've got to think both, I think, but you've got to be able to think backwards in terms of how can you get from where we are now to where you wanted to, where we are now to where we were before. So AS level obviously would be typically going forwards and moving on in the motion, whereas A2 you've got to think backwards and think in different ways. So very useful, I think. Hopefully you find that useful as well. So don't forget the appropriations account, even though it's not examinable anymore. Only examinable in partnership accounts in A2. So moving on, let's look at, I've got final, let's look at depreciation. So I'm going to use this on the slide, then in the Excel. Let's look at depreciation. This can be a hard question. So let's look at depreciation for the year. This is the expense, and here is some. Take this down. This is a kind of a list of things to consider. So we want the difference between the net book value at the end of a period, the period to the beginning of the period, and that's net book value. So that takes into account the cost and the ACDEP. Any revaluation, because that's going to affect surely that will affect the cost value, up or down, if it's depending on its upwards or downwards valuation. Any purchases of non-current assets, well, that's going to affect costs and increase costs. The net book value of the non-current asset disposed. So if we dispose of a fixed asset, non-current asset, it will decrease the starting balance of the cost, or in this case NBV. And another thing that this crops up, this has been in one question, a bonus share issue. Well, how does that affect fixed assets and depreciation? Well, if a bonus share issue was funded by the revaluation reserve. So it's quite interesting how you can think about that, but basically it's a revaluation account. So if a revaluation was utilised in a certain way, don't forget you've got to work something out first, the bonus issue, in order to find the revaluation amount in order to use in there. So look at bullet point 2 and that bullet point number 5 in relationship. And then lastly, I wanted to show you an example. So I'm going to use this as an example, and this was a recent question released by AQA. So I'm not going to do the whole question, I'm just going to do the calculate depreciation. So try and think of what's happening. It's incredibly difficult to think about this, but the way I think of it is, think of it at the beginning of the year, the end of the year, then during the year. Because during the year, what's this depreciation? This depreciation is the charge for the year. So the charge for the year is what is the value you want. But it's like, if you do maths, it's like algebra, it's like the value x. It's unknown. So you've got to find everything else, and then that value, what the difference between the values you know, is the missing value. So it becomes a little bit easier when you've got NBVs, and typically in the questions with the statement of financial position, you have got NBVs. Here we go. Let's move over to Excel, and let's have a look at this. What I'm talking about, this question. Right, so IAS 7, statement of cash flows and mini calculation. So here's the information, so you can screenshot this or whatever, take it down if you want. I'm just going to go through this information. The information's in the box, so information provided here, and I want to calculate the depreciation value to include in the statement of cash flows. So here's my calculation. This is how I'm going to approach it. This is the information I've gave you just on the PowerPoint. And here's some sub-calculation work. And the reason I have to do this is because from the information, which I'll go through in a moment, I've already mentioned this idea of this bonus issue. So it's kind of an extra step that you have to carry out before you can find a value. So that's just the information. I've got NBVs, start and end. So I'm not using dates, just being generic. The start of the period, the end of the period. NBVs. So remember NBV. Remember what it is. You've been this in the question, but it's cost minus AC dep. Now you rarely would get the cost values and the AC dep values. You can just use NBVs. It makes it a bit easier, I think, in some way. But if you might get the PPE, which is property, plant and equipment, which is the whole breakdown of cost and AC dep. But let's look at it in this way first. We've got ordinary share capital, beginning and end. So you spot some trends, see what's happening, why is it increasing, what could be the reason, because you might be told down here. Share premium. What's happened to share premium, and revaluation. So that was 0 and it's now 8,000. Okay, land and buildings were revalued at 85,000. So at 85,000. So what I'm doing here is I'm just moving the value so I can use the value for my formula. Non-current assets were purchased during the year. You got non-current assets that were sold. During the year, a bonus issue was made, 1 for 5. The revaluation reserve was used to fund the transaction. So that's the key point there it's mentioning. So there's a kind of a condition there you need to work together. The nominal par value, I don't know why it's nominal par, the nominal or the par value of the ordinary share capital is 50 pence per share. So I'm just using the values there so I can easily work this out with my method. So I've got to come over here first. I mean, you can start here, net book value at the end. In this case, try and appreciate what we're doing here. It's quite, you've got to think about the netting off and the difference between. So we're basically finding the difference between the start and the end, because depreciation, if we start with 125,530 and it's now 215,364, then there's a massive increase. Well, that could be just because we've bought a lot of assets, fixed assets. But don't forget, this is not cost. This is NBV. So that means there's also depreciation to take into consideration. And we know there's a whole load of issues in terms of there's a revaluation, and we've got to know whether it's an increase or a decrease. We know there's been a purchase. We know there's been a disposal or acquisition and disposal. So we know there is this fluctuation between increases to the net book value and decreases. So we have to examine the difference between those two numbers and account for them. So we net off them first. So NBV at the end. Be careful how we fill this in. Let's not go too quick. NBV at the start. And in this case, we're minusing. So we want the net difference. So 215, and we're minusing the net book value at the start. The purchase of a non-current asset. So we found the difference there between those two values, and that's always what you would do. Now we've got to think backwards. The purchase of a non-current asset, we're looking at this from the end of the period. So the purchase of a non-current asset, what would that do when we to the NBV when it happens? Well, it would increase the starting value. So if we start in this period 125,530, and then we buy a fixed asset, it's going to increase that value. But we're not looking at it from that point of view. We're looking at it from the end point of view. So we must decrease what we did actually buy from the end value. So here we're going to minus. We're going to bought it, which is added. We're going to take it away. The purchase value. So go down here, which is this value here. So we're minusing what we bought, which is the 139. Then we get onto they've got the bonus issue here, which I'll do that one. The revaluation, I'll do that one together because they're both interrelated. So you've got the revaluation. So they're connected. And you've got the NBV. So can we do this one? Net book value of the disposal. Look over here. Disposal is, where's the disposal gone? Non-current assets with net book value of 37 were sold for 3954. So obviously 39542 is the proceeds. So we want the 3769, this one. So this value here. And what's the sign? Are we going to take it away from the 215364 added? Well, if we disposed of it during the year, looking forward, so time's going forward, right? We've just disposed of a fixed asset. That would decrease the NBV, if you wish. It's cost really, but the NBV. So we're going backwards, so we've got to then add it. So that's why it's a positive value. So get the right value, goes in there. Now let's do these two together. So because they do interrelate. So it's a unique question. I want to make sure that you can do this. So let's just look at information relating to the revaluation and the bonus issue. So you've got a bonus issue which is states during the year a bonus issue was made on the basis of 1 for every 5 shares held. The revaluation reserve was used to. So let's have a look at this. Bonus issues, remind yourself, bonus issues, these are free shares to existing shareholders and they're funded by the company. So this is what is telling you that the revaluation reserve was used. So the shareholders don't pay for these, there's no flow of money, it's actually an outflow, it's actually a capital restructuring of the capital section. So here's the approach: find the cost of the bonus issue, okay, to determine the revaluation reserve value. Because whatever it cost for the bonus issue, that amount was used to finance it, and it came from a revaluation. Another thing to observe is the revaluation reserve balance. It's actually increased by 8,000. So it's increased by 8,000 plus whatever this cost of bonus issue was, because that's what the value for that is what financed the cost for the bonus issue. Let's do it, and we'll make more sense of interpret the answer. Right, here's the approach. Ordinary share capital. So I want the money that we're given. So ordinary share capital is, in this case, it's at the start of the year, because we can use that balance in order to do the bonus issue. So 85,000. The share par value, well, that's given as 50 pence. And then we want to know the quantity of shares. So how many 50 pences make £85,000? It's typically half, isn't it? So we just divide and you get twice the amount. Okay, so it's half of a pound, but you need twice as many shares times 50p to get the value. So you've got 170,000 shares. The scale is 1 new share, free share for 5 existing. So we want to work out, in this case, the scale. In this case, this is going to be, this one, the scale is 5. Because you want to know how many 5s, how many, in this case, lots we want. So if the scale is 5, you want to know how many 5s go into 170. So it's not 1, because they're going to get 1 share for every 5. So let's divide 170 by 5, and we get 34,000 sets or lots. It's not, I don't think it's a formal term, it's just the term I use. So we've got 170,000 raffle tickets, and we need to group them into sets of 5, because that's the criteria, that's the ratio. the proportion, whatever. And then we're going to give one extra share, one free share for every 5. So you've got 34,000 sets of 5, or lots of 5. So the bonus share per lot is 1. I know it's a bit easy when it's 1, but I'm still going to put it in so I can work it out. It could be 2 or whatever. So 34 times 1 is very difficult, 34,000. And the total cost of the bonus share, how did I get that? Well, the total cost of the bonus share, how much will it cost the company to issue 34,000 shares? Well, the way we do that is we don't sell them at a premium. We sell them at par value, a cost value, so 50 pence. So you're multiplying there, in this case, the 34,000 times the 50 pence. So it's costing the company £17,000 to fund the bonus issue. So that in all that, that's a calculation to work out the cost of the bonus issue. But the most important thing here is to realize what value have we worked out, or what does the value mean. The 17,000 came from the revaluation reserve, because when valued, it says here land and buildings were revalued at 85,000. Then because there is 17,000 which is used to fund something, you can't fund something from a revaluation when you have a downward revaluation. If you downward revalue something and you had obviously you didn't have revaluation reserve, then it's incredibly difficult to then use a capital to show that, because capital would go down, assets would go down. So you've got £17,000 of revaluation to account for, but in this case, if I split it up, which I have done in the two boxes, the bonus issue funded by the revaluation reserve, well, that is the 17,000. And because it was a revaluation, the bonus issue was funded by the revaluation. So what happened in this case in terms of the change, the revaluation? Well, a revaluation has increased the fixed assets, the net current assets. So if they've increased, we need to deduct the revaluation. Now, just before we move on, why is it deduct an increase or minus? You have to be certain here whether the revaluation was an increase or a decrease. You could easily have a revaluation which is a decrease, but because the revaluation has funded something, it's funded a bonus issue, well, that means it's generated capital. So it must have been an upwards revaluation. So an upward revaluation means capital increases, specifically the reserve, the account, and the assets increase. So it's increased by 70,000 plus something else, because we've also got the balance to take into consideration. So why is it minus? Let's clarify this. Why is it a minus? It's a minus because if there's an upwards revaluation, that means at the time it happened, that would increase net book value. So that means that we would increase the starting NBV. Now again, we're looking at it from the end of the period, so we're going backwards. So if it was to increase the NBV at the start, we now must decrease it. So it's a negative 17,000. The last element there is the revaluation as a balance. So think of the account has changed from 0 to 8,000, but during the year, the balance must have been higher because we funded the bonus issue. So it's been higher by 17,000 more. So it's also been higher. It's also another 8,000. So it's basically, might as well do formula equals minus 8,000. So to clarify the revaluation reserve, how much is the revaluation reserve changed by during the period? A total of £25,000. You can't see that on here because it's gone from 0 to 8,000. But take this for example, it's not the bank account, but if you had a bank account, if you started with zero money in your personal bank, you as a person now watching, if you had no money in your bank account and you've ended up with £8,000 in your bank at the end of it, does that mean that only £8,000 has gone into your account? Well, no, it could have been a net of it would have been a net of 8,000. You might have had £12,000 go in, £4,000 go out. That will give you the same balance. So be careful of how we understand and relate to even the revaluation. The total revaluation has been upward revaluation of 25,000. Now, this is not in the question, but something that's useful. If you take, in this case, take this statement here, the land and buildings were revalued at 85,000. So that means that you've got cost, in this case was a value, so we obviously don't know that, but and you've got ACDEP. Now I know ACDEP is a value, you don't know that, so basically you can just treat all this as NBV. So if you've got NBV, which is a value, and you now know at valuation, and the valuation is now 85,000, and this value has increased by the 25,000, then you can now with certainty work out the NBV, which is 85,000 minus, so I better add in this case because I've got negatives. So you know that the NBV was 60,000. You've got no idea about whether it's cost or ACDEP, but you do know with certainty that if it's 85,000 now, which it says in the question, and it's an upward revaluation 25,000, that the NBV would have been 60,000. So it's not useful for the question, but it's a guide to thinking about what things are and work, to open your mind to the question. So in that case, in this question, what have we worked out? What are we trying to work out from this? Obviously, it takes time to prepare all this, but in your work, you have to do some form of written answer. You must show you're working. From all of this, what was the key objective in this question? Simply to calculate the depreciation for the year. And let's put it in with the background different color so we can highlight this one. That is the sole value you need to work out. And when you do it this way, if you do it in the way I've done it, which is a brilliant approach to do it, if you've taken away values all the time, if you notice the value for depreciation, it's always going to be a negative number, because in reality depreciation is a cost, so it's displayed as being negative. So 36,998 is the charge for the year. Now, what does that mean? It means that that's the depreciation for this year on all existing assets that were held at the start of the year. However, taking into account the disposals, because if you dispose of an asset, you don't need the ACDEP. Any purchases of assets during the year, they would have been depreciated for, maybe pro rata, which is each month of the year. We've done the disposals, and any revaluation. When there's a revaluation of a fixed asset, of the cost, it's now at value. You must remove all the ACDEP. So to work out all the depreciation individually on each of the fixed assets, well, first of all, it's IAS work, but it would be incredibly difficult to do, and you need to think beyond that and think about if you've got a whole string of variables, A, B, C, D, E, F, G, and they're added and minus together, whatever, then you've got to be able to rearrange that, obviously equals a value, you've got to be able to rearrange that to make any of them the subject. So what we're doing here is, it's a maths perspective that I've got. I know some of you don't like maths, but what's on this page now? A lot of numbers, a lot of maths. So we've got to understand maths and numbers. So if depreciation is the letter D, and you've got A, B, C, D, E, F, G, H, I equals a value, then you've got to be able to make D equals. That's what you're doing. You're making D equals, and then you're doing all the maths to work out all the other numbers taken away. And you've just done that. You've done it with all these in here, but a sub-calculation to work out the value. So an incredible, I think it's challenging. It's a challenging question to get your head around this in the exam. Some of you might find this easy. I don't think it's easy, especially in the time you've got an exam. So the more of these you see, hopefully you may have seen this question before, the whole question, but just for the charge for the year, this is the kind of thing that you're having to interpret and work out and show some form of working. So in your exam, they would expect something along the lines of this element of working, just to show you how you arrived at that number or a number that you would get. Well, I hope you find this useful, and it's been a relatively long podcast. Hope you find it useful and of benefit to you students who are researching or taking this for the first time. I want to thank you for stopping by, and please do post some comments as to what you think of it in terms of the feedback and commentary. Any ways to improve, obviously I take feedback on board. And I'll see you next time for another podcast from Professor Accounting.